All right, what's going on, guys? So in this video, I'm gonna go over on everything you need to know that's relevant into the model that I've been trading, forward testing, back testing for about damn near 2 years, and of my market experience. So overall, we're gonna start off with in my Discord channel in the educational section, there is a terminology. Here is the list of vocab that I have written down on things that most beginners would need to know in order to understand on how these traders communicate with the present market. So we're just going to start off what's actually relevant and how it all connects into the model that we are looking for. So obviously, bullish market is when the market is trending upwards. So I'm going to show you guys examples as well, and I'll make it quick. So as you guys can see here, a bunch of expansion. The white candles is bullish candles, as you guys can see. Uh, Bigger range, bigger candles is what we want to see when the market is bullish and in our favor for whatever bias we have. So if you guys can take a look here from last Asia's low and today's Asia session right now, but from last Asia's low to present Asia high, we've made about 490 points, which is a pretty big range on what most traders, as of right now, for Asia traders are trading. Um, Pretty big range. So I'm gonna focus this on just one screen as of right now. Bearish market would be vice versa. And if you guys can take a look and focus on a higher time frame, obviously bigger hourly candles going down near towards these relative equal lows if possible. So again, bullish market would be us seeing white or green. Original colors would be green. Green candles expanding upwards. For original colors to be red, we would want to see our bearish candles form in a downtrend as well. And if you guys can take a look, you guys can see that this is what the market does over and over and over again. Little pump and dump. All right, so moving over here, I'm not going to go over any of this shit. Highs and lows. High of a bullish trend would be by the wicks. So we see this high up here from this wick, this low down here from these bodies. I'm mostly primarily focused on, not really the wicks, but the bodies. And I'm not focused just on the bodies on here. I'm focused on the wicks up here at these highs as well. But we go more in depth on how everything wouldn't be necessarily formed and what C1, C2, and C3 is. But as long as you can understand highs and lows on these time frames. So if I go ahead and go on a 15-minute time frame, I'm not primarily focused on any of these lows right here. I want to focus if we're chopping around on a lower time frame, or actually this is the mid time frame. If we are chopping around and I don't really know where our protected high and lows are, where the market wanted to go further down or higher up, I would then focus on the higher time frame and see that we're still bullish. So I would not want to seek any short setups or go against the market um, bullish uptrend by primarily focusing on the hourly time frame is still showing my green, or in this case my white candles going up at that time. But now we have Asia session during this time, and disregard most of the images or backgrounds noise that you guys see on my charts. It is what I use to look at the markets in order to create my bias and executions. And hopefully, after these next couple of videos, you would also understand what I'm looking at as well. So I'm basically sharing what my eyes see with you guys. Um, so going over, we have drawn liquidity. Usually, when I go into every trade, I would say my draw on liquidity would be uh, a price or a wick high and low that I was talking to you guys about. So from this low, I was looking at 845 on the NASDAQ, or I could say this wick low of Asia. Different ways to say draw liquidity or what my targets are, but basically you're just looking for specific targets in your trades. Obviously, I was shorting on this trade, so I had my draw liquidity here at these lows. Vice versa, draw liquidity would be at these highs if I was in longs right here, if I entered right here and wanted to target these highs, but I entered right here, wanted to target these lows. So that is a review over draw liquidity. Now we're going to go over premium and discount. So when I focused on premium and discount, I'm mostly focusing on the higher time frames. So as you guys can see, I mostly focus on the 15-minute time frame, occasionally a 30-minute time frame, but also an hourly and 4-hour, and also a daily time frame as well. So with starting with the hourly time frame, you guys would notice these decimals, these levels that you guys can see, and I'm gonna zoom in here. So by looking at the bearish trends and the bullish trends and marking out the highs and lows of these markets, primarily focusing on the higher time frame, I like to focus that on the hourly for my highs and lows, but 15 minutes to know whether uh, protected swing points from highs and lows are, and then I can go on to my lower time frames for my executions. But we are not there yet, focusing just on the highs and lows, breaking down from higher time frame to lower time frame. So if you guys can notice in the background, it also shows what I'm trading. It also shows the time frame that I am on. To know this setting, you go to settings and you go to canvas and see my watermark. So from this bearish trend, from the high to the low, I have this specific fib that I use that marks out my premium and discount levels on where I want to see sensitivity on mostly reversals or continuation with a bull trend or bear trend. Usually when we are trending, we would form a type of stairs in that case. So if you guys can see, we have a high up here in a bearish trend. We have a low right here. We form another high up here, and then we go lower as well. I know for most people, they would sometimes look, it's a lot more easier. Wicks, you have to know what the body openings, you have to understand the bodies in the wicks. But for an easier example here is from a line on what I'm showing you guys from a trend on it forming stairs back down. Vice versa up here. You have a high, low, high. It's like stairs going down. As you guys can see, this has different things going on at this time, but you guys would be able to adapt on whether to change your buys from it being a bearish trend to having a fast reversal on it being an uptrend. If you guys want to take a look on what I'm actually trying to break down on premium and discount levels and why we reversed right here, most people see a bearish trend and think that we want to go towards these lows right here. Let me thicken this real quick. So if we are trading in this range right here, we would be looking at this price at, if you guys take a far right, 357 all the way down to 946, which is where this mark is at right now. And it is because we are in a range from this high to this low in a discount on where we will want to see reversals or a continuation in the trend that we are seeking for. Obviously, we are in a bullish trend at this time. We had this noise, which means we're stuck between this high and this low. So this is what I call stuck in range. We have a breakout where we had market structure below this line right here, which is following our trend. So again, measuring out the entire range on what I'm focused on. It's a lot more easier if I go in a higher time frame, but we're gonna stay in the early time frame. We actually went in a discount, a high time frame discount. Literally, we're marking out an entire range of 2,000 points and dissecting it into decimals, basically. There is a setting where you can change this into percentages, but we are focusing on just the decimals on how we trade and look at these markets and when to expect reversals, when to expect volume, when to expect a market low for us to create our uptrend for stairs or downtrend for stairs as well. So it's a high probability on predicting on where these markets would be at by following the algorithm on highs and lows, premium discounts. Understanding those two concepts will get you pretty far on where we are trying to break down and how we are looking at these markets. So I'm going to go ahead and switch back to everything else. All right, so here in this range on what we are playing on, yes, we have this high that we are focused on, and we have this low that we are focused on. To better understand the picture on whether we are in an uptrend or a bear trend, we are going to zoom out to a higher time frame. In this case, I'm going to go to a 4-hour time frame and study on how this high is relevant for our bear trend on what we want to see. So first, we would understand the higher time frame protected swing points is what I call it, on whether this is the highest on where price would go and target towards our drawn liquidities, which are these wicks down here that we see. Again, that would then be vice versa for our bull trend. When we're in this range, we are looking for this high right here. When we are somewhere in this market. So here's our low, we create our high, we have a low right here, we expand a lot till we create our another high, and then we create our low. We expand a lot from our high to our low, leaving, what do you guys see? From this low somewhere to this high, we left a discount range. Market didn't come down towards half of the range from this high to this low. We were still, in other cases, if you guys understand order flow, absorption of more orders, where the market doesn't want to go lower and is in preparation on going higher, but there's a lot more sells, making this a bunch of orders on one, which is why on a 4-hour time frame we are very choppy in this range. Um, Usually, for market patterns that I would say when it comes to retail is we do have a time when markets would move in AMD. If we take a look, I'm pretty sure I have AMD or PO3 where here we see power 3. It is a market formation of accumulation is what we would see, then manipulation for the next phase, and for the last phase we would see a distribution. So in other words, it is PO3, or you can call it AMD, where it's accumulation, manipulation, distribution. That's the power 3, the 3 that we are looking for in a market. So most people have strategies where they can trade in the accumulation phases where it's just a bunch of chop and we are stuck in a range from, in this example, this high to, wait, excuse me, this low to this high. We're we're not breaking out of any of these. We are stuck in range. So that would be our accumulation that we are noticing. We have a manipulation down into this range of 270 that we are looking at on the NASDAQ. And what do you guys see? When I go back to the swing low into the swing highs, It is in a discount range, which is why we had a huge expansion because out of a 2,000 point range that we were looking at from just this low to this high, it's 2,000. We should be expecting a pretty big high volume, a pretty high volume day if time aligns with what we were looking for, because notice that we have a price. With this fib, it is showing me a potential bullish uptrend or bullish volume, or in this case, a market reversal, because most people will be bearish. So we would see a reversal right here at 275, and literally just off by a couple dollars or a couple points. 11 points is where we could have actually bottomed this whole entire market. And 19R, if you know, you know. But we're not doing things. We are not trading on the 4-hour time frame. We are just using the 4-hour time frame for the market narrative, for the market telling us where it's going. So I'm about 60 minutes into this video. Let's see what else I can review over with you guys. So again, what I'm looking for really is I want to see us continue in a bear trend, downward trend, bear trend, shorts, all the same thing, whatever you guys want to call it. So again, from marking my fib, from focusing on this high, reason why is because we had a New York open at that time, and I'm mostly going to focus on New York's high rather than um, 8 8:30 a.m. high, which is pre-market. I mean, either or, you guys can still focus on the same thing, but it gave me a lot more precision, as you guys can see on the $30,000 that we reached on the Nasdaq. So we had a nice bearish candle reaction. This bullish candle was setting traders up for shorts, and as you can see, into the next 30 minutes candle, we see it drop lower towards this red line that I have marked out, which is a previous session highs and lows. When I mean previous sessions, I mean I have a specific low, a swing point that I have marked out, and that would be measured at 822. Over at the far right, you guys can see 822 was my price target if we were going lower. But how I trade with price and time at this specific time, though, it was when we had London session opening. Yes, the market loves to move, or algorithmically, it is moving up, down, and our accumulation phases. But we also like to have that also aligned with specific time. So you can have a specific price all you want in this market, but as if it doesn't align with a specific timing in the market, you're not going to get the type of delivery that you want to see, whether you were targeting lowers or higher swing points. Market would fool you at that time. And when we are not in the specific time zones, which is what this London opening is at 2 a.m. and it closes at like 5 a.m. Same thing with this Asia. I have white lines that marks out my high and low, or this is New York. We started at 9:30 and usually we close around 11 is usually my cut zone. These are time zones again, and Asia always starts at 8. That's where the volume picks up at. But 6 p.m. is where market opens. So it is up to you whether you wanted to trade the 6 p.m. opening, which was right here. huge wick as you guys can see. But if we wanted to short, since we target this high that I went over with you guys, the market would target specific time zone highs and lows. With this market open, we swept this high of New York, which aligns with our price and a specific time because our time is aligned with market opening, which is what we want to see. But we failed to go lower because it wasn't aligned with our price and time. For my timing, I wanted to trade Asia, so I would wait and let the market do what it needs to do until Asia starts. Once Asia opened, there is your short. You guys also could have found bullish trend as well on a lower time frame, but again, we were focused on the higher time frame. But you guys are also able to find from measuring a range and dissecting it with our fib from the highs to the lows that we ended up coming into a discount where we had a long setup as well. I took this on demo and targeted somewhere in these highs. And then I had my short that you guys saw in the beginning of this video. Always though focused on the higher time frame narrative. So if we were short biased, there would be no reason for us to long in this range until Asia. Yes, Asia did open, but we can assume our accumulation, manipulation, distribution phase will then come into play because when we have price, time, and the market agreeing with all of that, we would usually form a AMD model where we have this low that looks pretty suspicious for Asia as it first opened. This was the low that Asia had. We had a couple of swing points, and then a huge expansion, and an expansion back down. This would be our V shape, which would be the manipulation that we would want to see. Usually, when we manipulate into something, we manipulate into some type of key level, key opening, specific price, swing points, or whatnot. But in this case, I mean, after seeing countless times, about 3 times, we respected this level that I had right here from measuring one of my decimal levels of the discount and premium levels. In this case, of it being a bear trend, we were measuring out the high to the low, finding our premium levels. So here, Asia manipulated back into that premium level, getting the exact price, and then continuing back down into our downtrend. And there you guys have it on how to understand swing points, how to understand whether they are protected highs and lows from looking at a higher time frame. What you guys can expect can be the next high and low of a trend. In this case, I told you we are in a downtrend from measuring this high to this low and measuring out from the points. As you guys can see, it was well over 900 points on the NASDAQ. Pretty big dump. And so we wanted to see specific price reactions out of our premium or discount ranges. As you guys can see as well, we did have a reversal and a huge expansion back from this low to this high, about 690 points. So again, I want to keep in mind where my highs and lows are at and whether what trend we are in or whether to understand in this market if we are stuck in a range. And as you guys can see, yes, we do have a lot of room from measuring the points from our highs and lows, that we have a lot of room of range that we can play in, which is tradable. But in times like this, for long term, if you guys are looking on the daily, I can't really tell whether we are going to continue back up towards these highs or we are going to continue lower towards these lows. In my opinion, I think we are going to go higher, but I'm probably just saying that because of my investment purposes. So, but again, if you guys have any other questions, please feel free to DM me, whether that is on my social medias, and that is at Norlander Trades. I can very well help over or review on what I meant by everything in this video, again, just feel free to DM me and ask me questions, whether it is from something else that you've heard or from the videos that I post. Um, I'm pretty sure that is all I have to share with you guys. I will then see you in the next video.